attract lots of institutional investors into the space. And if they make money in our space, they won't basically withdraw the money out of crypto space. Compare today's stablecoin fixed income with US Treasury bonds. Basically, US government is getting liquidity with basically zero cost. That's why I think they are trying very hard to stop like Coinbase to launch their Coinbase Earn, I think, which probably provide like 3 to 4% annual return for the investor in a regulatory way. So that's why I think this is what we're gonna work on the next quarter. We want to develop like an algorithm, decentralized stablecoin, and also provide like a fixed income, like all the investors will have like a fixed expectation for their return. It's easier for them to explain to their like LP, like their institutional investors, which I think this is also a very smart way to attract institutional money into crypto space. Thanks.
Yeah, thanks, Justin. Yeah, I guess our next topic is really relevant to what Justin just mentioned. I guess that cryptocurrencies are still kind of operationally difficult for large institutional investors to access. So how will financial institutions overcome the hurdle as the adoption continue to increase? So I guess the first one I'm going to put on the spot would be Romit. So should we see firms help build up this kind of infrastructure and ecosystem to support?
Oh, absolutely. Look, the job of any good VC fund is to follow the opportunity and back great teams in that space. This is a massive space, right? And I don't think it's a question of whether will institutions do it or not today. I mean, I believe 70% plus of the total volume on Coinbase is institutional. There was a report just last year by Chainalysis that about 60% of the volume in DeFi is from institutional transactions, which is essentially a size of $10 million plus. So the fact that it's completely composable, you can create different products, the yields are higher, it's instant settlement. This is a no-brainer for institutions, right? And they have to be here. Now, the point is that they've not come in because there are multiple reasons. Obviously, regulatory is a big thing. But if you sort of take out and zoom out your worldview outside the US, you'd recognize that let's say in India, for example, and I can talk about that, there are hundreds of billions of dollars of a debt market that institutions are accessing today for liquidity and yields. But they do not want to come to crypto because the on-ramp is fundamentally in US peg pairs, which exposes them to forex risk, right? How does that get solved? So maybe the answer is that in the world outside the US, when CBDCs take off and there's liquidity built for on-ramps on that purpose, that starts getting institutions into the system. The point is that there is a base layer of infra that needs to get built. I think that's a collaboration between the government and policymakers, and companies working in tandem with them. And then there is the product layer of it, which is basically easier on ramps, managed custody, or basically making KYC solutions that are automated. And that's where the VC opportunity lies, and that's what we are funding. I think Polygon just last night, for example, rolled out its anonymous KYC on zero knowledge proof, and that's a great step for at least individuals to start doing that. You'd probably see more innovation in the institutional space as well. And yeah, of course, we're looking for those opportunities.
It's great to know. Yeah, and maybe for Melody, do you have any suggestions or advice for institutions to tap on this kind of investment opportunity?
Sure. I think number one, of course, I think echoing what Romit is talking about, I think there's a lot of the infrastructure side of for the technology that is not caught up yet, right? Whether it's security, we keep getting hacked every other week. Sorry, it's just me. And then, is it me? Maybe I. So the infrastructure side, whether it's custody, whether it's security. I mean, blockchain has only been around for 10 years, and real DeFi has been around for a couple of years. The magnitude of money that has been pumped into DeFi, and it's not battle tested, right? For institutions to really come in to leverage real decentralized technology instead of just trading Bitcoin, we're still quite far away. We have been investing in institutional DeFi infrastructure for a long time. A few companies we invested, Credo, which is a Europe-based decentralized MPC and the Liquidity network. The founders is in his 60s, and then they built systems for banks for decades. So these kind of people know how to build for institutions, and they also deeply understand decentralization, they understand security, they understand cryptography. So these kind of founders are very hard to find, and we need to find them and support them to build that bridge, right, between DeFi and institutional grade users and banks. My other thesis very much is about actually generating more crypto native assets, because we're too small, right? If we are today or with our own work, right, whether it's through creating value in music, in art, in the metaverse, in game, the natively generated assets are going to be 10x or 100x. I bet the institutions are going to move a little bit faster. So I think it's really like, we need to focus on both. But I think what will make them more excited is actually we create a lot more natively generated decentralized assets to make them, if they don't move to embrace us, we're going to just develop our own institutional grade financial system within our new network, and they're going to have to just integrate. But by then, they might not even have the influence that they have today. So I think, it's very much, both sides we have to work on for the institutional money to come in, really.
Maybe for Justin, right? Like as an ecosystem builder for Tron, how do you plan to facilitate and help institutions to adopt?
Yeah, sure. As we just discussed, cryptocurrency, the whole industry has grown from basically, I think at that time when I first got in, the whole industry is around 10 million US dollars. Basically only Bitcoin and one Bitcoin, $1. And today we already get around like $2 trillion. If we want to have 10x return for the next cycle, probably, right, we need to become like a $20 trillion industry, which I think we need to attract lots of liquidity and money into the industry. For this stage, I think the biggest important thing we need to do is, as I just said before, I think we need to provide like a fixed and constant return to the institution investor. So, for example, imagine you are like a fund manager of like 10 billion like US dollars. Most of the time, you will think 10x like return is impossible, right? Even sometimes crypto industry has this kind of the return. 10x return, you will say, no, but like 10% annual return, you will say yes, right? So that's why I think today we already have the business model on that, like DeFi. I'm also one of the biggest miners in RV. But the problem, I think, for DeFi today, first of all, is the security problem. Lots of DeFi application get hacked, like people lose their money. And then the second thing I think is the basically the return is still not like a fixed return. So lots of people will be cautious since the token volatility is very high, so they still get exposure to the token volatility. I think eventually if crypto has built a very consistent fixed income business model and compete, basically if we have the same confidence level with US Treasury bonds, but with almost like a 100x higher return than US Treasury bonds, we can really attract lots of institution money into the industry. They can borrow lots of money to get into our industry, which I think definitely will overall further grow the industry even more.
Great, thank you. And maybe for Magnus, right? Like you help so many like Web2 builders to succeed. Yeah, like how are they adjusting to this trend?
Yeah, so I think we live in this incredible, unprecedented times, right? Which only happens perhaps once every second generation or so. Like the last one was, the internet revolution. Before that was the age of the first computers coming in. And we don't really know where that world will go, right? You guys in the room here and the people on stage here are creating that world. What we know for a fact is that it's going to be a big part of the future economy. So that's one part, right? We live in this like generational moment where all of us have the opportunity to build the future. So that's one. Then you combine that with a world where, I think the treasury interest rates is, in the 2% right now. Inflation is at 5-6%. You have hundreds of trillions of dollars out there earning a negative yield, right? And that capital is mostly institutional and it will seek returns. But it moves incredibly slowly, right? Insanely slowly, right? For anyone here who's worked in an institution, their decision-making process is typically like 18 to 24 months, right, from when you meet them the first time. And if you think about venture capitalism industry, which really has kind of backed the whole Web 2 revolution, right? It's now most really good institutions, like really great institutions, they have about a 10 to 15% exposure to venture capital. The bad institutions have 0. And that's been going on for like 30, 35 years. So it will happen, but it will happen slowly. It will happen because of the reasons that Romit and Melody and Justin talked about. But once, and it already started happening, but when it starts moving, you're really tapping into these hundreds of trillions of dollars where 1 percentage point just means an incredible influx of capital, right? And I think if you think about this over a period of time, to get to Justin's like $20 trillion target, if you follow like a slightly faster trajectory than you saw in the venture capital world up until now, or for Web 2, that can happen where institutions is a big part of that over the next kind of 5 to 10 years, just following the same timeline. And it needs to happen because like otherwise all of these funds that are securing the pensions and the national budgets or the budgets for educational institutions, they won't have the money to follow up their obligations, right? So it needs to happen, it will happen, but I think it will follow kind of a similar path as we see in the Web 2. So it's going to be slow, and it's going to happen for the reasons that you laid out.
Very exciting times. I guess let's move to the next topic. So much of the infrastructure for investing and interacting with crypto space are mostly on-chain and decentralized. So especially with those like very high-profile DeFi projects, the institutions, right, because of auditing concerns, they mostly opt for centralized platform. So do you foresee there is a future that institutional investors will be more willing to interact with decentralized protocols? So I guess, most relevant would be for Justin as the builder for Tron, right? Like, how do you help institutional investors to tap on this? Yeah.
Yes, sure. I think institutional investor, as you just said, I think first of all, their decision cycle is very long. So they need basically, I think, 3 reasons for moving to crypto. I think first of all, they will have, like, as I just said, constant and fixed income return. And then, so they will expect it, they will have return. As long as it's higher, much higher than US Treasury bonds, I think they are okay with it. And then they don't want to lose money, so I think they better have like good custody services like Binance custody for sure. I think, and also I think custody services will be very popular because those institutions, they want custody basically. Because custody, not only they are safer with cold wallet, but also they have insurance to cover those funds, right? And third, I think is easy to use portal for them. So I think right now DeFi have finished the first step, but we still need to get through the second step. Have a reliable infrastructure, easy to use, and also they will have like a consistent expectation, so they can stay long in the industry. I think that's also an advantage because once they stay in the crypto industry, right, they also need probably 12 months to, if they make decision to pull out of money, right, yeah. They still need that time period to make decision. So that's why I think once we persuade them to get into crypto, they're gonna really stay here. So so that's why I think this is also the best opportunity for crypto in 2022 this year. Yeah.
Thanks. And maybe for Magnus, like, what do you think is the biggest hurdle for institutions to adopt decentralized protocols?
Yeah, so I think Justin touched on a lot of the very important ones. They need to feel that they don't like 0 to 1 risk, right? So you need to somehow be able to remove that, and I think a combination of custody, insurances, and so on will be helpful. At the same time, the more you can convince them that this is like venture capital was in the early stages, the easier I think it is to convince them, because they know that some of the funds that they backed at the time did not deliver returns, but then some of them delivered really incredible returns. So the net result of that was like a 30–40% net IRR at that category of their investments, instead of the general investment that they made, which was around 4%. So I think, it's also about convincing them to kind of spread out the risk and do multiple different things, and then that the basket will outperform what they're doing currently. And I think Justin also made a really good point, which is once you have them on board, it's there, right? Like, so it's about like getting them to jump over that hurdle. And I'm just 100% convinced, like, given the current environment where most institutional capital out there is earning a negative yield, there will be a big inflow in this space over the next few years.
I guess next question is for both Melody and Romit, right? What kind of trend for investment is relevant to this? Helping traditional investors bridge and get into crypto to DeFi. Maybe Melanie first, yeah.
Sure. Yeah, so if we look back on the evolution of the infrastructure and the companies, it's been successful so far. Web3 or crypto is very different from Web2. Like, we're very bottom up. And we build first. It's everything's open source. Everything is permissionless. I can build something that I can offer product to you tomorrow. I don't need to ask somebody else to give me permission to build a wallet on Bitcoin, right? You can start depositing like tomorrow. But it also means there has been a lot of different quality and different types of entrepreneur has been building in this space. And there has been not so great reputation being generated if people, there's a rug pulls, right? There are a lot of hacks, exchanges are not properly set up and they lose clients' money. So there needs to be a massive transition from that to regulated businesses that our regulators understand, trust. The system is certified, is to the quality of the institutional grade. So I think in terms of investment for something that is like people to easy to understand, I think regulated business is something that for bigger, more institutional venture or PE funds, like they love this. And I think we need their money and their brand, right, to help these companies to get the regulation, to pave the way. And also for DeFi, it's very much about the technology. The technology needs to approach it from a more decentralized way. Like, if we're going to rebuild the decentralized infrastructure, what do we need? Can we do decentralized custody? Can we do decentralized cross-margining? But all of these tools needs to be there for us to migrate from a centralized system, just running crypto through, or decentralized infrastructure. So these are all very interesting areas. Depending on what kind of investors you are, like, you need to think about your strategy. Whether can you do this regulated business? The return, what does that look like? What kind of founder you can find? Can you do DeFi, right? Can you find that kind of cryptographer and the system builders who understand DeFi and institutional to build on this side? So it's just so many opportunities, right? It's just, I think the thesis is there. Like, for us, we probably more focus on the DeFi side. But on our advisory business, we actually work with a really big NASDAQ SPAC. They're trying to look for regulated crypto business. So take that to Wall Street, right? Take that to the institutional investors. So we're working on both sides.
And for Romit?
Sure. I think Melody's given a great answer. I don't want to add anything in terms of the product, but maybe just leave it with this thought that, look, I personally, and I'm just speaking for myself, I don't care that much about institutions. But I still think that it's important that institutions get onboarded to DeFi. Why is that? I think that's important because if the goal is to get 1 billion people onto DeFi platforms, what does that entail? That entails that on-ramp should be easy, your money should be safe. The volatility, for those who have the appetite, go for it, but many people don't have it. That's the reality. They should be comfortable getting the yields that are sustainable and that they can feel safe about, right? Now, what a company or a product that serves institution does is that it creates that base layer infra and platform that allows this to essentially happen, right? Which is why it's exciting. I mean, why I spend my day in and day out in Web3 is because I want to make sure that we are building products and there are challenges and we're backing teams that essentially allow 1 billion people to sort of take benefits of DeFi, right? And institutions are a great way to actually have that flywheel effect going because they'll create that infra layer, and that's what's exciting. So all the products that Melody has mentioned, that Magnus has mentioned, that Justin's working on, they're excellent platforms to get the next generation of people in. And the way crypto succeeds is because it's for everyone, it's not for institutions. So let's use them as a leverage to make sure that we achieve the goal of what the space is all about.
That's a fantastic ending. I guess let's thank again everyone for this amazing sharing today. Yeah, and that's it for our panel.
Awesome. Thanks for hosting.
Yeah, thank you.
Thank you so much to Nicole and her panelists. What great information for investors out there. It is so important to stay informed in this industry. Things are always moving so fast. It's just so hard to stay up to date. So it's great to hear from people like that. Omar, what is next?
Next, we're going to be diving straight into crypto investment with a panel specially made for retail investors. It will be hosted and moderated by Binance's head of institutional clients, Catherine C. The panel will discuss the future trends and future for retail crypto investors. So without further ado, ladies and gentlemen, please help me welcome to the stage with a round of applause, Catherine C. and her panel.
Hello, everyone. Very pleased to be here. So I think a lot of you here are probably the crypto OG who has seen it all, since the beginning of Bitcoin, Bitcoin's arrival and its ups and downs. However, it is true that over the past couple of years, we're definitely seeing rapid adoption in the broader investor base. I'm very, very pleased to have my fellow panelists here today representing different aspects of retail crypto investing. So without further ado, I'll just let each one of you very quickly introducing yourself as well your company before we kickstart the panel. Yeah? Mate, would you like to actually go first?
Yes.
Since you're the first stage into crypto investing.
Sure. First, thank you for having me. It's an honor for me to be here. It's super exciting. The energy is super exciting. So I'm Ade Badawi. I'm the VP of Engineering at BitOasis. I've come from backgrounds of startups, e-commerce, and now on the crypto journey, that's for sure. BitOasis, was actually established and founded here in UAE in 2015. And what we do, we deliver, a crypto exchange service and wallet for GCC specifically. We operate in 7 countries. But we're focused on the GCC customer to buy, sell crypto. And we're actually the first, exchange that was registered and, kind of reports to the FIU unit in Central Bank of UAE.
Great, thank you. John?
Hi, I'm John Ge, the CEO of Metroport, and before Metroport, I'm co-founder of Bitman. So about Metroport is a Singapore-based crypto bank. We provide a one-stop financial service, everything in crypto. Thank you.
Demi? Yeah.
Yeah, I'm the Chief Strategy Officer of Amber Group. Amber Group is a digital finance gateway, an aspiring neobank and neobroker, and an infrastructure business, a B2C and a B2B business. Being the Chief Strategy Officer, my background is I was a crypto founder, a hedge fund manager, a multi-family office businessman, commodity trading, and I was a partner at Goldman Sachs a long time ago. Thank you very much. I'm very excited to be here.
Thank you. And lastly, Jerry.
Thank you, Catherine. My name is Jerry, and I'm the CEO of VCV Digital. Our mission is to create renewable crypto data center and hopefully bring that to traditional real estate investors.
Yeah, thank you all. So to open up our conversation and discussion today, I would like to really quickly get your pick on what's your view? How do you think we can, go from 10x from here, similar to the performance of the asset class? How can we go 10x in terms of crypto adoption across retail investor? And actually also, while we're on that, I would also like to know from your perspective, what do you reckon is the most exciting trend across retail investment in the next, let's say, 5 years? So Made, why don't you share your view here?
Absolutely, absolutely. So it's, the crypto adoption in the Middle East and GCC has never been higher before, right? For the past year, we've seen, 1,500 growth on adoption rate compared to 800 of the global average. That's twice. And a lot of that actually is retail users. And it comes from two specific type of users. The type of user who is tech savvy, early adopter, specifically in GCC and outside of GCC Middle East. You've got the users who actually want to kind of escape and combat the currency devaluation that is happening across the Middle East, right? So it's super, super exciting. It's around 2 to 3% adoption rate compared to 15 to 16% in other international markets. So it's very, very rapidly growing, and it's double the average outside, right? From a retail perspective, we at Better Oasis, we think there are 3 specific things that will help us to grow 10x. We've seen 5x in retail growth the last 6 months only, right? One is around accessibility, right? How easy is it for the retail user to onboard on the system? Sign up, KYC, deposit, as well as do their first transaction, and how localized is that, right? The second part is, the regulation piece, as well as what's the consumer protection, right? And how easy is the ecosystem from a regulation perspective? And the third, is the crypto, awareness initiatives, right? It can be product-based, or it can actually be, crypto academy-based. But from product-based, how easy is it for me as a user to get on the system, as a newbie, graduate to an amateur trader? And a lot of percentage of users will remain there, not go to daily traders, but eventually, how does the product help me get to a daily usage of crypto from a payment perspective? Social community is extremely important, and we think those 3 specific areas are so important to grow to 10x and even beyond that for the retail user specifically.
And that's just investment directly into crypto. We see a lot more developed form of product that grants essentially a slightly different but equal accessibility to investor who would like to get into crypto. With that, I would like to actually check with you, John. What's your view on that?
Yeah, so bring 10 times used to crypto field, I think maybe NFT will be the opportunity. So we know now the main application of crypto is about investment and speculation. And as the best asset class in past 10 years, I think somehow all investors, no matter you are retail or institutions, you however already involved in. So the rest of the population, there are some ones that maybe they have no money to do the investment, or they just don't care about the investment. But NFT is more about your daily life. Now it's more about the art, trend, fashion, but I believe that it will scale to a lot of category and bring more users. Yes, this is also the most exciting things that I believe in next 5 years. I mean the scaling and the boom of on-chain assets. Yeah, so I believe in that finally there will be more than 100,000 asset category on blockchain, and they will be more close to our daily life, not just investment speculation. I can give you an example. So we know that there's a lot of restaurants closed down during the COVID. Yeah, I think they actually can mint NFT for some kind of a membership. And for us, for myself, yeah, I eat some restaurant for many years, so I don't want them closed down. But what I can do, I don't want to invest money to be a shareholder. Yeah, I enjoy their food, but it doesn't mean that I want to earn money from the restaurant. But if they minted some kind of NFT represent the priority or represent the membership, I will super interested because I enjoy their food and spend some money to be the membership and be treated as a VIP. It totally makes sense for me. Yeah, so this is more about the connections, more about the brand recognition. It's not about the investment. So in our daily life, I think most of the things is about the life itself. It's not something like we call the investment or speculation.
Interesting.
Yeah.
Interesting. Dimi, your view?
Yeah, I would think that having seen the last 2 years, starting from financial applications onto creation, identity and display, as we call it, with NFTs and the metaverse, evolving into aspects that touch upon and more our daily lives in ways that wouldn't be accessible otherwise, thinking of crypto as an enabling technology rather than as an asset class. So thinking about sustainability initiatives and topics of interest, especially of the newer generation, I would think those three verticals will continue to grow, and the trend is inexorably higher towards the multiplication that we all hope for.
And here, Jerry, again, you represent a very, very different angle, which brings in almost like a unique TradFi financial investment angle and connected with crypto. And I would really like to hear your view on this.
Yeah, sure. So my background is in commercial real estate, and one thing that happened during COVID is the adoption of a hybrid kind of work mode. People, some people go to office, and some people go to office through Zoom. That's kind of, to me, like and very similar to what John was saying. It's a kind of new reality that's kind of emerging, which is our lives are going to be in both the reality, the physical reality, and also potentially the computing reality, which is everyone's saying the metaverse. I think that will be the most exciting trend in the next 5 years, 10 years for crypto. With the advance in AR, VR, and lots of people working on various crypto protocols to lay the foundation for metaverse, I think that would bring in mass adoption, bringing the regular people that John was referring to the crypto universe.
Awesome. So it is true that I think we've gone through a few scares, but I think a lot of people are expecting a potential bear market coming in the past, as we have witnessed in the past decade. So what will be your recommendation or investment strategy for an investor, especially retail investor, going into a bearish market? Maded?
Sure. That's a really awesome question. I think, as a retail user, the first thing that I think the retail user should understand is, the defensive and intelligent trading strategies and investing strategies and framework has been around for a long time, right? And has been proven that it actually works in different asset class, right? And it's no different when you do invest in crypto versus other assets that have been around for years, decades, right? But in general, there are 4 principles that comes to my mind, and I'd like maybe to share from a retail perspective. The first one is, set goals and understand, how much are you willing to lose and how much are you willing to gain, right? And if you decide to invest X amount, right? If you lose 50% on that amount, would it change your life, right? You need to understand, that percentage and that amount that would not change your life. So one, understand your goals, right? The second part, or the second principle is, understand that, this is a long-term thinking and a long-term hodl, right? If you are investing in a very valuable asset class, Bitcoin is, the best asset class the last 10 years, and it's proven. And if you choose the right asset class, over time, it is going to gain value, right? If it's the right asset class. So it's a long-term gain, and you should not be, kind of looking at the short-term impact. Right, understanding those two principles will, take us to the third, which is, don't fall prey to FOMO or fear of uncertainty and doubt, right? And only if you understand those two things, you'll be able to master that third principle and not trade with your emotions, right? The fourth one, which is, where it's very action-oriented, the retail user would want to know, okay, what should I do, right? I want to take an action. And the fourth one is, see the opportunities and understand when you can potentially rebalance and enter dips, right? So in a bear market, there are very opportunities to get in. But if you don't want to do that and you just want to be, a passive investor, a very proven method is just DCA, right? Dollar cost averaging, which is, being able to set the right amount to invest over a regular period of time. And it works both ways, right? It works in bearish markets and bullish markets. It actually works better in bearish markets than actually in bull markets. I think those four principles are so important for the retail investor to think about, and I think it's proven that it has worked.
Anyone else who would like to chime in?
I would say one could stick with the basics and start from the fact that even with interest rates going up in the real world, one can still earn anywhere from 4 to 8% parking their dollars with crypto firms. So even starting from the very, very basics and thinking of alternatives to one's checking account or savings account is like a first step towards enjoying and participating and learning how to send money through a wallet and just familiarizing oneself with the infrastructure. One doesn't really need to necessarily speculate or rediscover investment principles, exactly because I think it's more advisable as an investor to think of crypto as a technology, an enabling technology, rather than an asset class itself. So start with the basics and also just basic interest rates, or even as a second step, principal protected notes with some upside. There are some simple ways to get familiar and still retain one's capital in good shape.
And I understand MatrixPort is really big on structured type of investment. Is there any idea you would like to share with our audience in terms of using packaged product to access to help investors have a smoother ride during bearish market?
Yeah, I think first thing is you should volatility is the core of the crypto, right? So you should understand that the bearish market is actually the best period that you do the investment. So we have a lot of products and can help you earn passive income, and we also have a lot of product to help you buy the crypto, like buy Bitcoin and buy Ethereum below the market. So use it and achieve your target is always the key. Yeah, I think everyone who earn money, he actually goes through the bearish, right? So catches this opportunity.
And on the note of passive income, Jerry actually shared with me a very interesting idea, which again is using traditional finance instrument, almost like packaging, crypto mining assets related income into a ETF. That will really, for me, that is really eye-opening. I would like to hear your view. And do you think this is actually going to be a viable strategy during bearish market?
Thank you, Catherine. So just to be clear, we are, our mission is to create these data centers. So we're not actually taking the mining risk, which is relevant to the BTC price volatility. Our business is just to provide energy and the space for mining companies or other type of a blockchain infrastructure, companies. So there's a inherent cushion for any type of price volatility. BTC price will have to drop by 70 to 80% before it hits our bottom line. Right now, the yield is pretty high based on initial capex. If we spend $10 million to build a data center, we can probably get the money back in 12 to 18 months. And just as a background, the conventional data center that everyone hears about, like the cloud computing center and other type of server data centers, 10 years ago, 15 years ago, they were not considered I guess, prestige or coveted asset class in real estate space. Nobody was giving them loans or financings actually over 10 years ago. And now these data centers have become the most, I guess, pursued assets by global investors. So there's a massive potential for the yield compression. You invest today, you can get your money back in 12 to 18 months, and you have a potential for a 10x, 20x upside. And if you look back at these conventional data center companies, the market cap went up almost by 20x in the past 10 years.
Okay, that's very impressive. Now on to a slightly less exciting but very crucial question, which is regulation. Again, to a lot of people, regulation is always a tricky point. It kind of is a necessary existence to really open up the door. And here I would like to ask my panelists, what's your view on how regulation will actually change and help shape the crypto retail investment landscape?
Sure. Regulation is an extremely important piece, right? And we've realized that at BitOasis, for a while. Actually, last year, we're lucky in UAE that we have, multiple authorities. We actually not one, we have 3 authorities that are actually regulating or in the process of regulating crypto, right? But last year and the year before, there weren't enough, right? So we actually reached out to Central Bank of UAE and worked with them to kind of figure out a way or a framework to actually regulate us, right? Please help regulate us. And and that's when we established registration with the central bank and found a way to actually report all suspicious activities, right? So that's so important, right? And then we would love that to continue, right? And we're super lucky in UAE to have 3 different bodies, right? So you've got the ADGM, the ASCA, as well as the DWCA, right? So UAE is a great place for regulation, and it's so important because it helps pushes best practices, and more importantly, pushes for consumer protection, right? Mm-hmm. And the second aspect, right, is the ability for us to actually ease integrations with the rest of the ecosystem, whether it's banks or other financial products, right? So, that's extremely important for the retail side of things, right? So, UAE is very, leading from that perspective. Bahrain as well, right? There's a brokerage license that you can attempt. Other large markets, unfortunately, in the Middle East, like Egypt or Morocco or Pakistan, they still have a lot of restrictive or bans in these areas, and they're more on the ban pre-regulation rather than enable, right? And the view on this is, and we've seen that work in UAE as well as Europe, where even pre-regulation, regulation is open to enable crypto while supervising it, while they're building that regulation framework. And we think that's super important for the ecosystem. One, it also attracts VCs. It attracts talent, right? So it helps grow the ecosystem. And the second part, which is directly to the product, is it enables fiat on and off ramp, right? When it eases the integrations with banks, then you've got an easy way for the consumer, the retail user, to actually onboard bank account or your credit card, any medium of your existing fiat to actually buy your first crypto. And that's so important for onboarding. Right, we are the only company in UAE that has actually local on and off ramp in UAE, and we've seen that extremely important from a retail perspective.
Interesting. Dimi, any view?
Yeah, we are very focused on regulation, and just the last year we got licenses and registrations in Australia and Japan. There will be news in other countries in Asia, in Switzerland, in the UK. And we have various application loads. What I want to highlight is that there is a lot one can do, even as is, with current existing regulatory framework, using the traditional finance rails to deliver crypto underlying risk. Trying to link the two questions, the question you asked before and the one now. If one wants to access yield in crypto, one can do it in a fully compliant fashion. And again, Amber Group is reasonably focused on structured products. If one wants to hold their Bitcoin and keep selling call options to generate yield in a bear market scenario, one can do it in a fully compliant fashion, even as it's today, in few ways, fully conforming with the regulatory framework. One just needs to be respectful, open-minded, and look at how the existing framework can accommodate certain topics. So sooner or later, every regulator globally has clear guidelines. The opportunity to arb between crypto regulations and financial market regulations will not exist. So we are very focused to deliver that service to our clients, and I think everyone should be looking the same way in that front.
Absolutely, I think it's a no-brainer. It sounded like it's just a trend that we all need to embrace and to essentially get the mass retail ready for crypto adoption. Now, last but not the least, I would like to just go around and ask every single one of you, how do you envision yourself as an individual or your company would help and shape the crypto retail investment landscape in the foreseeable future? Yeah. John?
Yeah, sure. I believe finally the blockchain will be reshape the financial market, and because this new technology can bring better user experience, it's cheaper, and it's more for long-tail assets. So what we want to do is we want to build a platform on the blockchain and serve more people and support more assets and do more things. Right now, traditional financial service just don't support.
Awesome.
Yes, this is our vision.
Thank you, John. Jerry?
Yeah, thank you. So I think I see ourselves to bring in more traditional retail investors through the data center real estate asset class idea. Probably in 2-3 years, we'll be branch out to other, traditional assets that will bring in a lot of, especially in the U.S., the baby boomers who has a lot of net worth.
Fantastic. Ade?
Besides onboarding and getting, the adoption, one of the most exciting things to move towards in the next 5 years is use it more than just an investment asset, but also a payment asset, and become in the daily lives. That would be super exciting.
Awesome.
So Amber Group via its Whale FinApp already offers a gateway to digital assets, creation, display, metaverse, and identity, as we call it. Sustainability will be our focus. You will be able to access all your financial needs in terms of investment, payment, savings on one app across asset classes using cryptos and enabling technologies. So we're very excited about that.
Fantastic. I think the future is under control, and the retail investor can have a lot of exciting things in the working to expect. Thank you all so much for your time today, and thank you for the audience for participating, for being here with us.
Thank you.
Thank you.
All right. Thank you very much to Catherine C. and the panel. That was a very thoughtful and insightful discussion. Go back. Now, ladies and gentlemen, of course, with retail investors making up such a large portion of today's market, it is always very good and exciting to stay on top of the trends. Now, Leah, what do we have up next?
Absolutely. Well, up next, we are very excited for a keynote speech. We have Mr. Khalifa Al-Jaziri. He serves as the Commercial Affairs Regulator Sector Projects Advisor at the UAE Ministry of Economy. He's here to run us through Dubai's vision for cryptocurrency investments and regulation. Khalifa has a wealth of experience and knowledge when it comes to blockchain, and he's also the co-founder of the Dubai Blockchain Center. So this is certainly going to be extremely informative, and we are very excited. So please, could everyone give a very warm round of applause for Mr. Khalifa Al-Jazeeri.
Good morning, ladies and gentlemen, and distinguished guests. First, let me take the chance to welcome you all to Dubai and the United Arab Emirates. Hosting events like this within our city shows our true dedication to blockchain innovation. After 2 days of programming, I'm sure the insights you've gained here in Dubai will spread around the globe as you make your way back home. When we think of today's topic of mastering the essential of crypto investments and trading, it's essential to have a broad perspective. Investment isn't just about holding Bitcoins. It's also about investing in the infrastructure, people, technology that change people's lives. The government of the UAE and Dubai is investing and developing the key areas that will make blockchain innovation work. There are a variety of ways we do this. These include growing our local crypto industry, attracting outside talent, and creating supportive legislation. But before we get into specifics, let me take the chance to emphasize again the innovation in the blockchain, crypto, and fintech space is at the heart of Dubai and the UAE's digital economy. To begin, let's look at crypto as part of a larger fintech movement. Our dedication to investing in this sector is plain to see. We have several funds that directly support innovation occurring here. For example, you need only to look at Mohammed bin Rashid Al Maktoum Innovation Fund to see this point in practice. The Innovation Fund is helping to deliver financial backing worth 2 billion dirham to support the work of pioneering startups, many of which are in the fintech space. The Ministry of Finance also supports Dubai Innovation Lab, creating a commitment to establish and spread the culture of innovation as a foundation for government work. The lab provides an environment that inspires individuals to develop innovative ideas and projects that improve the government financial systems. Fintech and blockchain included is delivering the achievement of the ministry's strategic goals. When we dive deeper into our support for fintech innovation, it's plain to see the ways Dubai has concentrated on the blockchain. In April 2018, the UAE government launched our Emirates Blockchain Strategy 2021. This strategy aimed to capitalize on blockchain technology and transform 50% of government transactions onto the blockchain by 2021. This movement was created to save time, resource, and facilities our citizens to best use blockchain technology. Through Emirates Blockchain Strategy 2021, we look to save 11 billion in transaction and document processed routinely, 398 million printed documents annually, and 77 million working hours annually as well. This brings a return on investment that isn't measured in tokens or coins, but in efficiency. The UAE will also aim for blockchain for digital transaction and payments, giving each user a unique wallet linked to their information on secure blockchains. As information and data on the blockchain are immutable and can't be changed, our investment in the technology ensures the digital security of national documents. All these provide a return in reducing operational costs. Let's look at Dubai's unique strategy in blockchain investment too, as part of the UAE. The Dubai blockchain strategy has a key aim to make us the first city fully powered by blockchain. The strategy has developed three strategic pillars: government efficiency, industry creation, and international leadership. As we've touched on government efficiency and industry creation, Let's take a closer look at international leadership. Creating change on a global scale needs us to invest in Dubai's best and brightest leaders. For example, Dubai's Global Blockchain Council brings together 46 members, including, not limited to, government entities, leading UAE banks, international companies, free zones, and blockchain technology firms. Together, they create the unified leadership needed to represent Dubai and the UAE on the international stage. So, what are the results of this investment in blockchain technology? Let's see how it plays out on the ground. As a result of our investments, to give an example, Dubai's Road and Transport Authority started working on a blockchain vehicle lifecycle management project. The system's rollout would provide car manufacturers, insurance companies, dealers, consumers, and the entire industry with a transport model for a vehicle's history. As a sector that often suffers from a consumer's lack of trust, investing in this crypto solution creates a model where everyone has a provable source of information. We shouldn't forget that the UAE also invests in the crypto industry through its legislative efforts. Crypto doesn't just need financial support from UAE investors, it also requires a time investment from regulators. This will create a safer asset providers. These key developments allow the UAE to operate similarly to other global financial centers like Hong Kong and Singapore. Some of the nation's economic free zones have already issued permits for VASPs. Dubai Multi-Commodity Center has licensed around 20, and Abu Dhabi Global Market has licensed around 6, and the Dubai Silicon Oasis Authority has also distributed license. The government completed a risk assessment on virtual asset involving over 10 public sector agencies and 15 private sector actors to create a supportive environment. This has also involved consultation with the Financial Action Task Force, FATF, and deep research into successful strategies employed in other countries. With the UAE and the Middle East With the UAE as the Middle East's third largest crypto market, according to data from Chainalysis, it's imperative that the UAE invest in creating relevant legislation. We've already achieved our goal of issuing licenses by the end of Q1 2022. We are also making the guideline and rules needed to regulate crypto mining within this framework. Apart from VASP licenses, the UAE government is also planning on building and regulating the crypto mining industry. Much of this has been done through the Dubai World Trade Center, as we turn it into a zone for crypto and blockchain regulation. When we look at Binance as an example, its exclusive membership of understanding with the DWTC in December 2021 ended up blooming into a license. As mentioned previously, similar regulatory work occurred through our free zones situated throughout the UAE. These free zones were among the first to successfully introduce digital asset regulation in the UAE. Some free zones also implemented tokenized security regulation, which is still unregulated in many jurisdictions worldwide. One project particularly close to me in blockchain is the Dubai Blockchain Center. As a co-founder, I've taken great pride in its role in building awareness and fostering innovation. Through the Blockchain Center, we aim to bring together blockchain thought leaders, developers, investors, and educators. Our time investment includes organizing free blockchain 101 awareness session in Arabic and English and hosting use case focused events and demonstrations. We also support private and public sector companies on blockchain technology and appropriate use cases. To conclude, I hope it's plain to see the real dedication we take to investing in our digital asset and blockchain economy. Through this work, we've enabled our best and brightest to develop. We've protected crypto holders and investors in Dubai and the UAE through sound regulation. The UAE has also created an attractive opportunity for international blockchain companies to make Dubai and the UAE home. With this in mind, it's plain to see why events like this occur in the UAE. The UAE is a welcome home for crypto and those who want to help develop the digital future we deserve. Once again, I thank you all for visiting Dubai, and I extend the warmest of welcome and wish you all a pleasant stay in this home of innovation. Thank you very much.
Oh, good. You can just put it down, is it?
Mr. Khalifa Al-Jaziri of the Ministry of Economy in the UAE. And I mean, ladies and gentlemen, those were very promising and powerful words. I mean, for the UAE to be fully powered by blockchain, or the first country to be fully powered by blockchain, that definitely sounds very promising. And it's amazing to see the UAE position itself as a leader when it comes to blockchain and crypto. So, Leia, what do we have next?
Up next, we have the very first fireside chat of the day. So we have Binance Custody's Kathy Yu and the president of the WSR Association, Jason Chen. They will be discussing the needs of institutional investors and crypto custody solutions. So let's please welcome them both to the stage.
Round of applause, ladies and gentlemen.
Yeah. You sit here.
I sit here? Sure. Why not? Hello, everyone. Welcome to the Fireside Station, and it's our honor to have Jason from Wall Street to come and join us today. So Jason, I see your background is from Bank of New York Mellon, which is actually the largest custodian bank, which is holding over $46 trillion. And also last Monday, we have seen Goldman Sachs has made their first crypto OTC trade. So we have seen there are more and more Wall Street traditional financial institutions are coming to crypto. What's your views on this?
Yeah, thank you for inviting me to the conference. And it's a great honor to be here. And I'm from New York a couple days ago. I worked on Wall Street for 28 years. And on Wall Street, I have what we call Asian American Managing Director group. Mm-hmm. So pretty much those people work for Goldman, Morgan, BlackRock, Blackstone, and we do have some members in Asia. For example, the chairman of the #1 largest hedge fund, and the chairman of the second largest hedge fund in Asia.
Yes.
So I think that's the reason why I'm here to maybe give you guys some color on what's happening to what the institution, the major player are thinking about the digital asset. And you brought up a very interesting news, mm-hmm. The Goldman Sachs. And people can Google the news, or you can go to the Goldman Sachs website, right? On their homepage, they announced they start to make the first digital asset transaction. And I think that's the big news because it's very important news to other banks. The reason, if the people looking at Goldman is the #1 investment bank mm-hmm. on Wall Street, right?
Yes.
So how about Citibank, Wells Fargo, Bank of America? If they see Goldman doing a trade with the digital asset, then other people, all other players, they are thinking, hey, we already have someone else there, okay? They solve all the risk issue, compliance issue. We should do something as well. And another thing, okay, why the major banks are getting into this digital asset area, I would say is due to the client pressure. For example, 3 weeks ago, I met with JP Morgan, and they told me a lot of their private banking clients asked JP Morgan private banking to provide services. So the client can allocate the asset in the digital asset. But they only have 2 banks in the US can do the digital asset. The first one called Singular Bank. The second one is SVB, Silicon Valley Bank. So in other words, if the major bank, they don't provide that service to their client, those people are going to open their account at the other bank, their peer. So they got peer pressure.
Yes, exactly. So it's actually glad to hear there's more like the banks, institutions, like asset managers, they're coming to crypto. Do you have an idea like what's the percentage that these asset managers are coming to crypto, already in crypto? Like, do you have a number for that?
Okay. The direct buyer on Wall Street, we are talking about more like a mutual fund, hedge fund, okay?
Yep.
I will say, first of all, the digital asset has already become major asset class, just like a precious metal, right? Like a gold, silver, you know. So they need to allocate part of digital asset in their portfolio. We call portfolio allocation.
Yep.
Same as a life insurance company. The second thing, because the digital asset offer a lot of investment opportunity. For example, for the stable coin, right? You can deposit and you can make 4%, 5% return. Sounds not much, but if you look at US Treasury for 3 months, right? Or you look at a single A corporate bond, less than 1 year, you normally just get 2%, 3%. If you deposit your money into the Citibank, your checking account is like 0.1%.
Yes.
You know, it's nothing.
Yes.
So the second thing is, we are talking to, based on some research I read, okay, 30% asset manager already put their money into the digital asset. Another 30%, they're planning to put the money into the digital asset in the next 12 months.
Okay.
Okay? And let's look at the amount.
Yep.
Okay? So Bitcoin, as of today, I think the total market cap is only $900 billion.
Yes.
But if you look at BlackRock, the AUM for BlackRock is $10 trillion. Okay? If you look at Vanguard, they got $7.2 trillion.
Yep.
If you look at Fidelity, they got $4 trillion. And I'm just saying 3 of the mutual fund. I'm not saying other player yet. So if you just add those number up, you know, so the Bitcoin is only 900 billion. That's just nothing.
Yeah, so we're pretty much compare billions to trillions here.
Yeah.
Right? So from the old money to new money. So actually it's glad so to hear that 30% of the asset managers are already in, right? So another 30 they're coming and another 40 they're probably holding. So in your view, so what's actually holding the other 30 to 70% of the asset managers like coming into crypto? What will be their biggest concerns?
Okay. After I spoke to a lot of major players, let's say D-Shore, right?
Yeah.
Two Sigma, and Renaissance, the senior people. A lot of people are very interested, but digital asset is a new concept to most of the people. Okay, it's kind of new product, and we do see a lot of opportunity. But why they are holding back, right? So what's the reason? And maybe I'm new in this area as well. You know, you are in this field for 6 years.
Right.
You know, I'm still learning. Maybe I can use, some kind of common feedback from my friend.
Sure.
The number one, right? So we always see some highlight, right? Wall Street Journal, Bloomberg. They say the exchange was hacked. We lost $50 million or whatever, you know. Yeah, $50 million is not much compared with 2.5 trillion with the entire digital asset. But we do see that kind of news once in a while, you know. So that's why we don't feel so comfortable. Can you just give me some color on that?
Yeah, definitely. I mean, that's actually what we heard a lot from the institution players, that one of their business concern is about hacking.
Yeah.
Right. So actually, in the past year, like in 2021 alone, there's over about like 20 exchanges got hacked. That's exactly where the custodians need to come in and to actually serve the institutional clients better. And what the custodian going to provide for the institutional players is totally cold storage. So it's not online, and you cannot be hacked. So that's actually solved the first concern, like that you can have a good sleep, right? You don't have to worry about the next day you wake up and your assets are gone.
Okay,
right?
okay.
So, and also like for the custody, so for example, the Binance custody were live even just like December 2021. But on top of that, we also got the insurance provided. We got approved by Live London. So that's actually another layer to provide the assets, just to give the institutional players more comfort into this place. So just like like if you hold a trust, right, in the old money in the old world, that you have a trust account at the bank. So the custody is playing the same role. So we're gonna hold your assets with the insurance and the cold storage, so you don't need to worry about this.
Oh, okay.
Yeah.
Okay.
Is there any other concerns I may have?
Let's see. Okay. The second thing. Okay.
Yeah.
I would like to say, sometimes we got external risk, but sometimes we concern about our internal risk.
Yes.
Right. So when I work for Bank of New York, right now is the world's largest custodian bank with $43 trillion or $46 trillion. The number change a little bit once a while.
Yes.
And I work on the trading desk. We only have 4 guys there, 4 officers. And we at 2016, 2006, we generate around 30% of the entire Bank of New York profit, So, but anyway, because that question is related to the custodian,
Yes.
right? So my second question is going to be on the custodian a little bit more. So for example, maybe it's better for me to use the example, right?
Sure.
Let's say the hedge fund I have right now is, let's say we have $500 million.
Yeah.
We have in the digital asset. But for whatever reason, I hire a bad guy, CFO.
That
this
happens.
guy took my phone away. And he know my password.
Oh.
Then am I going to have some risk to lose my asset?
Exactly. I mean, that's another very generic example, right? So for the large institutions, number one, you cannot do all the work yourself, right? So you need to have the CFO or your finance person to do this. So that's another thing, the custody that we're going to help the institutional players. So number one, we have multi-layers, for you to prove every single transaction. So for example, your CFO got your phone key somehow, or even maybe yourself dropped the phone, right? So in the water or something. So we can help you to use the MPC technology, which is actually physically we help you to multi-sig, to sign out every single transaction. And on top of that, so even that your CFO do know everything. Every time you do a withdrawal from the custody account to elsewhere, we check the 2FA, we check the whitelist, the address you're withdrawing from, and also the biometric verification. We probably will find out there's some abnormal transaction behavior even before you find out.
You mean if my CFO took the phone away, right?
Yep.
I'm not even aware of that, right?
Right, but we probably do before you.
Okay.
Right, so and then we have the 24/7 support, so we will definitely give you a call to do all this manual check. So we have the technology part to prevent all the things happens. We also have the manual, the central custody to help you. Even you need to mitigate all this kind of risk. We can actually regenerate the key for you. So the key thing is for the custody account, there's no private key exist. So if you in general, if you thought you're gonna lose or forget your C face or anything, it's not exist in the custody. So the custody is designed for the institutional players. Yes.
So at the same time, I can call your guy to tell you, let's say even at 2 p.m. New York time, you guys always be there?
No problem, yes. We're 24/7, just at the crypto space. We never stop.
Oh, okay. Money never sleep.
Never sleep, that's true. That's true. Yeah, so on top of that, for the institutional players, so pretty much the custody gonna play the same for the traditional hedge fund trust. We're also gonna do the audit reports, to help you make your assets on the balance sheets shows exactly as the other investment that you're making. So you don't need to worry about like what should I generate the financial report, how should I report this kind of like Bitcoin's assets under my investment. You don't have to worry about any of those.
So I can fire my CPA people, right? You mean?
Pretty much, yeah. Your money is your money, right?
Oh, okay.
Yeah. So so also like for the institutions, like if do you want to invest into crypto? I think as you mentioned, the top concerns, if I can rephrase it, is always risk. Right. So if we can like eliminate all these kind of concerns like from you, like since you're the representative of Wall Street, how much money do you think like this old money can fall into crypto?
Yeah, I think for the mainstream, right, for the major player on the market.
Yes.
If we can solve the custodian sort of risk, and we have solved the compliance issue, you know.
Yep.
And I think more players definitely going to look into it, as I mentioned before. And 30% people already put the money there.
Yep.
And most likely they are not small player. So most likely the bigger player pay more attention into this digital asset.
Yes.
So right now, I know a lot of funds, they are building up their team. They already put some money into it to see how that thing works. And another, I just mentioned before, 30% are planning to do it in the 12 months.
Yep.
So again, think about the amount of money, you know. Just like a BlackRock, Vanguard, Fidelity, we are talking about, it's over $20 trillion. I'm not adding those life insurance. I'm not adding those pension funds, sovereign funds. So you're talking about a big amount. So let's say you got $30 trillion, and you time that 30%, then you can figure out the number, you know. Then the Bitcoin is only 900 billion. And I mean, I think it's a good time for long term, especially for Bitcoin investor.
Yeah, I think that's a good news for every single one here, right? So if we're talking about the $1 trillion about the Bitcoin market or the crypto market, then we know what's the price of Bitcoin in the future. I think that's pretty obvious. Thank you so much, Jason, for coming and joining us. Thank you so much, everyone. This way, Jason.
So much to Kathy and to Jason for that very fascinating conversation. Omar, tell us, what do we have next?
So up next, our panel will be discussing a very interesting topic, and especially for anybody out there who holds cryptocurrency, which I assume is the majority. So let's take a look at the investment potential with Ripple's Aurélie Delem and her panel. Ladies and gentlemen, please help me welcome them to the stage.
Hi everyone, we have such a great opportunity today with this outstanding panel to discuss a top of mind topic, which is like passive income for crypto holders. So we know like many crypto holders, they want to know how to earn passive income. So let's jump right in. We're going to talk about CeFi, DeFi, and the future trends. So let's get started by introducing our wonderful panel. Sami, if you want to get started, like, can you introduce yourself and your take on passive income, please?
Thank you. So my name is Sami Vaittinen. I'm working as a product marketing lead at Binance Earn. Binance Earn is a passive income generation platform within Binance Exchange, and we are providing various features to meet all of the user needs when they start their passive income journey. From zero risk products who want to have full flexibility, staking, which is providing higher APY for users in terms of higher APY, but also CeFi liquidity farming and structured products for high yield opportunities.
Thank you very much. Kalin, would you mind introducing yourself and give your take on crypto?
Good afternoon, everyone. My name is Kalin Metoriev. I am a co-founder and managing partner at Nexo. We developed a proprietary platform that provides comprehensive financial services to over 4 million global users in 200 jurisdictions. While we're mostly known for being the largest crypto-backed lender in the retail space, we also offer borrowing and interest-earning services. Obviously, what's very interesting about that is that on our flexible earning product, we pay daily compounding interest rates. So that's one of the innovations we added to the space. And more recently, we have also integrated smart order routing platform that combines trading on 20 exchanges for both retail and institutional users in the space.
David, thank you, Carolina.
Yeah.
David, would you mind?
Hi, I'm David Olson. I'm the head of distribution for BlockFi globally. I joined the company about 2 years ago. For those of you that don't know BlockFi, we're a financial services company in crypto. We provide asset-backed loans against crypto for retail and institutional, as well as an interest-bearing product, a credit card with Bitcoin rewards in the US. For our institutional clients, we power their businesses by lending them capital, coins, and fiat through our BlockFi Prime platform, as well as offering a trading infrastructure as well for them.
Thank you, David. Brian?
Hi, everyone. My name is Brian Tan. I'm head of operations at Trust Wallet. We're building the easiest to use multi-chain wallet for iPhones and Androids, which we think is going to be a great discovery and entry point for users to start getting into native on-chain staking, discovering different DeFi protocols, whether it's lending, yield farming, and all the other wealth of DeFi projects, whether it's metaverse, NFTs, and things like that.
Thank you, Brian. Thank you all for the introduction. So Sami, let's start with you. So looking at all the unbanked people on this planet, which represent more than 1 billion inhabitants, and they don't have access to the traditional ways of passive income, what is the role that crypto plays for them?
Yes, so listeners might be surprised here to know that there are actually quite a few people globally, like you mentioned, who don't have access to traditional banking systems or networks. For example, in emerging markets, where they would like to start their passive income journey, they simply don't have possibility to do this. Now, as soon as they have access to internet, they can download their preferred, for example, central exchange platform on their phone. They complete the registration, KYC, buy their first coin, and they're ready to start the passive income journey. And so basically, the key takeaway is that for many people, crypto is the enabler, providing the first access to passive income. And for those users who already have been doing, for example, in traditional finance, it's a way to diversify their portfolio.
Thank you. Thank you very much, Sami. And good to see unbanked having access to passive income also. Thank you. Brian, let's continue with you. So looking at the crypto ecosystem in general, how does passive income contribute to a more healthy and stable ecosystem?
Yeah, that's a great question. I think passive income education for new users to crypto is super important to helping them understand that there is more to crypto than just day trading and looking at candlestick charts or hype-driven projects and trying to find the next coin that's going to moon, so to speak, right? I think all the different protocols out there that passive income comes from actually underpins a lot of very important infrastructure that helps keep crypto secure. So whether that's mining and staking and securing data on the blockchain, or lending that allows for a lot of important things like arbitrage and things like algorithmically backed stablecoins like we see on Terra, all these things actually generate passive income and are super critical to the health and security of blockchains and crypto.
Perfect. Thank you, Brian. Thank you for showing how it contributes. Kalin, to you now. So we're moving on more to the CeFi aspect of passive income. And we often say like CeFi is the entry for the masses for passive income. What kind of users are choosing CeFi in terms of passive income? What are their motivation? What are their expectations?
Well, there is obviously much to be said about the different ways that centralized finance platforms and DeFi platforms offer their services. Yeah, I absolutely support this notion, and it's not just my own opinion, but obviously there's plenty of statistics out there that users predominantly use services through CeFi platforms. I probably would say that the number of people using CeFi platforms versus DeFi platforms is probably 10 to 1, or something to that, to that effect. And of course it's natural, because the people using centralized platforms are those that prefer more hand-holding. They obviously have somebody to speak with, somebody to advise them how to avoid some of the technological and financial pitfalls in the space in general. DeFi, we obviously at Nexo we have a strong focus on DeFi as well, and we like the innovation coming from the space. But at the same time, the more technologically advanced people tend to prefer this type of service. So again, somebody to speak with, somebody to help you avoid risks, to help you with reporting, tax issues, guidance, advice. Is something that we mostly do at Nexo as a centralized finance platform.
Thank you, Karin, and good to see that CeFi is a good gateway for many users to get into passive income. Interesting on the 10-to-1 ratio. Thank you for that, David. So, looking at institutional clients, what is their journey when they come into CeFi? When they learn more and more about the different platforms, the different possibilities, opportunities, and navigating their way, what is their journey?
Sure. I think that one of the things that we do really well at BlockFi is providing a white glove service and taking institutional clients from literally zero knowledge about crypto to knowing a lot about the ecosystem, to buying their first Bitcoin or Ether, to then putting it into BlockFi's ecosystem to earn yield on. And I think that that's the start of the journey, and I've seen it happen several times, many times, and some of even our investors, we've taken on that journey and then they want to invest in the company. I think that the key thing that everybody is, kind of falls on their seat about is, why are the yields so high in crypto? And the reason is, it's a non-bank funded market. Right? So if you look at other non-bank funded markets like middle market lending or SME lending, the yields are also higher. So players like BlockFi serve that need of providing capital. DeFi, why did DeFi emerge? Also as an answer to the lack of funding in the market. So the ecosystem has a unique role to fill, given that there's no central banks. Another thing that surprised me was a lot of our institutional clients are very interested in DeFi. Even if they don't have any experience in it, they want to know about it because the yield opportunity is so attractive. You're looking at, through BlockFi or Nexo or even DeFi, a fixed income slice of an asset class that's rising exponentially. So it's a safe entry point into crypto if you don't want to take directional exposure. And so we help, with a little bit of guidance in terms of what platforms we think are institutional. There are institutions now investing into DeFi, but not really through their own balance sheets. They're investing in companies that, in the space, crypto native managers that then manage those risks for them. So it's a little bit, you see like gray-haired people investing in companies that have very young 25, 30-year-olds to manage, hundreds of millions of dollars. They're starting to hire some people in-house, but it's a gradual process.
Good to see some institutional also moving to DeFi and getting that appetite. And as you said, that's a big question that we often hear, in passive income, and that's for you, Sami. Why are we seeing such big yields in crypto on DeFi and CeFi compared to traditional finance? Where is it coming from?
Yeah, that's a good question, and it's a very topical given the recently increased inflation as well. How is it possible that in traditional finance you're getting 0.5% interest, for example, from the European banks? Why, for example, Binance in the flexible savings product can provide 10% or even higher on stable coins? And this is rather straightforward. So it's in traditional finance, it's central banks which are deciding the interest rates, while in crypto it's more about reflected based on the supply and demand situation. So in our low-risk product category, flexible savings, we are able to provide 10% on stable coins because, for example, we have really high demand on the loan side, so we are able to keep the funds internally and provide higher APY for the users. And then if people are still not convinced that, okay, but there's a lot of risks, even though you say that it's a low-risk product, I always tell that do your own research. And if you want to give it a try, you can start with the central exchange platforms with as little as $1. Give it a try, do your first deposit to the platform, learn the mechanisms and see how it works. And once you're convinced, you can put more funds and see if this is the suitable solution for your passive income journey.
Thank you, Sami. So now I'm convinced I want to get into passive income. I want to get started. For you, Brian, how should I choose between DeFi and CeFi? Where should I get started?
Yeah, I think Kaylin touched on this a little bit earlier with CeFi. Obviously, the experience, you can have a high level of support and someone there to guide you along the way. With DeFi, I think it's for people who maybe are a little bit more advanced or want to have custody of their own funds and not be limited by things like different tiers of KYC or limitations on deposits from their bank account, things like that. I think additionally, DeFi really offers a lot of flexibility and choice. I think platforms like Nexo, Binance Earn are great, but they're probably not going to be the first place that the newest project's going to be available to users. I think if you want to be on a brand new project that you just discovered and really want to support and be involved in, DeFi is probably going to be the best option to get involved there because the CeFi platforms are much more effective at offering that curated experience. And so, like I said, for more technically advanced, I think DeFi makes a lot of sense. For people who are just getting started, I think CeFi adds a lot of value in terms of what they have to offer with support and guidance.
So CeFi, like a more curated experience, and DeFi, a more breadth of access to projects.
Yeah, absolutely.
Thank you very much. So David, for you, we have said earlier many times that CeFi could be seen as the gateway for the masses. How could we make DeFi more approachable for newcomers?
Well, I think it's really interesting, what Brian just touched on. And if you look a year and a half ago when Curve came out, it was the UX was terrible. I remember trying to use it and I had to get like a 25-year-old on the team to like help me navigate it, set up the MetaMask wallet, get everything staked, do this. Now you have DeFi platforms that look a lot like their Web 2 experience is amazing, right? It looks exactly like a CeFi platform. I think the issue is that all these companies are less than a year and a half old. So they're very untested. So I think at this point, it's great. You can see some of them have very attractive yields, but you need to ask yourself, how is that yield being generated? Maybe it's an investor, they're just basically burning cash to be able to pay that yield for a short period of time. Don't know what the risks are behind it in terms of the protocol code and the auditing behind it. So and when BlockFi is looking at the DeFi space now for own treasury management, and we haven't really deployed yet, but we're saying these are the things we're looking at as an institution in terms of risk. And we treat our clients' money as though it's our own money and saying, okay, would I myself be comfortable in participating? So I think it's really about time. I think there's some services that are coming out, and I've met a couple here that provide auditing and risk management in terms of DeFi protocols, and that's really interesting, and we need to see those proliferate. And BlockFi will probably partner with those to act as a gateway and a turnkey solution for our investors to be able to get into DeFi. I don't think we'll ever have like BlockFi DAO, that won't exist, but we can help people navigate the ecosystem. At the end of the day, I think it's a bit of a lifestyle choice, I think, as Kaylin was mentioning. Like I'm an experienced user. I could have lots of DeFi platforms, I could, but the reality is I like the CeFi experience for the most part. But that being said, there's some really interesting things happening in DeFi, and that's where interesting things, not in passive income, in terms of option strategies that are being automated. There's a gentleman at dinner last night that I met from Jones DAO, and they're automating option strategy. Really interesting stuff. So I think there's a lot of innovation, but I think that it's about the time. The test of time will tell which ones are actually solid.
And if you would allow me just to finish David's thoughts here, one thing that we always try to do as part of our interaction with our users is to educate as much as possible, especially the young users. Everybody talks about this yield and that yield on this new DeFi platform or this new L1 infrastructure, but what everybody forgets is one of the first rules in traditional finance. You have to look at the return, but you also have to look at the risk, and you always have to basically decide which basically area of this risk reward equilibrium you want to position yourself in. And one thing that we always try to tell people, our users, even our employees, is that everything we do needs to look more like the traditional finance and the traditional capital markets. You need to know who you're working with in the first place. A lot of these DeFi platforms, you have no idea who's behind it. Is it just a couple of people somewhere in the world with zero business experience? Yes, there's the technological functionality there. There is an attractive yield percentage, presented on the front of the page, but who are these people? Can they turn this into a successful business model? And we see things in the market. Just last week, with this immensely large hack, that happened on the Ronin, network, and then a bunch of other hacks that have taken place, a lot of rug pulls, a lot of pumps and dumps. And one thing we all need to understand here in this room is that this might be okay, for a large number of small retail users, throwing a little bit of money here and there just to feel involved in the space and to play around with these functionalities. But you have to be absolutely certain no institution will accept this kind of non-market risk, and we all as an industry, as an ecosystem, need to work on optimizing these, and basically making sure that these events don't happen, because that just reflects poorly on all of us and on the total market capitalization of the space.
Yeah, so basically don't be just a yield chaser, understand all the risk behind that you're taking and do your own due diligence on that.
100%, yes.
Yeah. So Kalin, next question is for you. So what will it take to bring the next wave of passive income people onto passive income, basically?
Well, I mean, the next wave of users, not just for passive income purposes, obviously for investments in the space, for utilization of services that are being provided. As I said, they all need to feel like they are working with somebody that is giving them, this experienced white glove type of approach, as it is in any industry. I mean, you want to go and get a sandwich, around the corner. You don't want to. I mean, you want to see. That there is a process there, there is hygiene, people are experienced, they know what they're doing, they're fair, and they're providing a high quality product and service for the money that you're paying. It's the same thing here. People need to know who they work with, they need to know where you're located. One of the very next things that everybody in this space needs to start doing is providing financial statements to their stakeholders, their customers, their investors, audited financial statements. I mean, not just, we have a very large wave of institutional companies, trading companies onboarding on our prime brokerage platform, and some of them are presenting financial statements to us that look like, somebody just drew something on half a page, maybe there is a signature there. Audit, that's highly unlikely, and we just go back and we say, listen, guys, I mean, we're talking about managing, tens or hundreds of millions of dollars, which are your prop money, or in many cases, they are, basically, this counterparties users' money, and we're saying, this needs to happen in a way, in an institutional way, with transparency, with clarity, about. I don't know, there were the 3 C's of business I remember, studying in, business school, character, capacity, and capital. And I can tell you, in many of these cases, we don't even see one of them. So we always say to our users, do your homework, know who you're doing business with, know who owns the service that is being offered to you, verify and ask hundreds of questions about the professional experience of the team. What is the risk management algorithm and protocols in the company? How is the money being used, as everybody here on the stage mentioned as well, and feel comfortable about the risks that you're taking long term with this particular service provider.
Thank you very much, Kalina, and good reminder to do your own due diligence. So looking at the future, Sami, what do you think the future holds? Like, what are the trends that you're seeing, the use cases that are interesting to you in terms of passive income?
Yeah, like we have heard during this event in the past couple of days, we know that NFT is a big trend. And I believe that passive income borrow many things from NFT as well, such as fractionalized NFTs of real-life assets. So I would not be surprised to see in the near future that people could be actually staking a project like real estate projects where users can get their staking APY in returns of rental fees from these real estate projects, or they can participate in building new shopping malls, for example. So there's going to be a lot of interesting opportunities coming in the future.
Perfect. Brian, the conclusion is for you, like you have the honor of the conclusion. So where do you see, like in 5-10 years, where is it coming? Where is it going in terms of passive income?
Yeah, I think the reality is no one can say for sure. As Sami alluded to with NFTs, when Satoshi released his white paper in 2008, I don't think he could have anticipated the kind of craze around NFTs that exists today. And actually, NFTs are an interesting illustration of how artwork is actually can be monetized, and artists can earn residual income through the commissions and from the sales of NFTs, right? And so by extension of that, there are other projects where people are tokenizing other real-world assets. So there's things like BitTorrent token or Filecoin that allow people to put things like bandwidth and storage on the blockchain, and internet infrastructure providers can earn income that way, right? And so we're barely just scratching the surface of what we can do. I think all of us collectively in this room and our extended communities are the ones that are going to write that future and chart that path. And so for us to say that we know where this is going to be 5-10 years from now, I think we'd be lying to ourselves. So that's why all of us working together is going to make we have the destiny in our own hands, and it's really exciting to see where that's going to take us.
Thank you very much. So NFT and tokenization, thank you very much for that. Thank you to the panel, with great discussion, and looking forward to see what the future holds. Huh? Thank you.
Thank you.
Thank you.
Thank you.
All right, thank you very much to Aurélie and the panel. And as you've heard, ladies and gentlemen, there are a lot of ways out there how we can all put our crypto to work. So, Leah, what do we have up next?
Yeah, well, absolutely. I think we should be making our money work for us rather than working for our money. That's the best way I think it's been put, and I enjoy it. So, hot off the trail of investing, let's take a look at the different ways that we can actually start raising money in crypto. So Ken Lee, investment director at Binance Labs, is going to discuss what is the right fundraising model for your project with his panel. So please, ladies and gentlemen, give a huge round of applause to Ken Lee and his panel.
Okay, great. Well, I think let's just jump in. I'll just briefly introduce myself and the panel here. Thank you everybody for joining, but my name is Ken. I'm an investment director here at Binance Labs. Thank you guys so much for joining. We've got Vuk from Protocol Labs, Matthias from CVVC, Jeremy from Pleaser DAO, as well as Chip, and then Yida from Shima Capital. So gentlemen, backstage, we promised everybody that we would leak some massive alpha during this conversation, so let's do good on that promise. I'm just going to kick off briefly with just setting the stage with some figures in terms of our industry right now. So private VC capital has grown 7x in 2021 to 25 billion in AUM. Dow Treasuries, 42x to 16 billion in AUM, and IDO volume, 20x in the past year. So obviously significant increases. So maybe I'll just kind of start first down the line, starting with you, Vuk, on just your perspective on the state of the market in terms of fundraising, investment, just general interest in crypto VC right now.
Yeah, I generally think we are in a completely different game. Like, it's not anymore about fundraising. It's more about thinking how to distribute tokens or shares in a way that helps you in the longer term. So like, capital is so abundant right now, especially in crypto. Even though we are getting in a recession, like, that's not going to change for crypto. So like, yeah, I think it's pretty good, like, in the crypto space generally.
So we're from Switzerland, so traditional VC based out of Crypto Valley with a global focus. I think both the market has matured and hasn't, right? So all the players entering the market, the traditional VCs, they help mature the market. But then on the other hand, I think it also still very immature. You know, we're back in 2017, ICOs are back, early liquidity. So these are risk factors from a VC perspective or from an investor perspective. But you know, we've just recently in Switzerland, we've done a research paper and we've asked 50 of the legacy players, so asset managers, private banks based out of Switzerland, whether they're planning to introduce digital assets in over the coming 6 to 12 months. And over 50% said they will, right? So I think that's going to continue.
Yeah, I'll keep it punchy. Yeah, I think it's tough not to be bullish on short and long term. I mean, I read a report yesterday from CoinShares. It was 193 million went into crypto funds this past week, which is the largest the last 3 months. To kind of back on this uptick, and then you know, from the traditional capital side, I mean, you have massive platforms entering into the space directly and indirectly, like the Brevin Howards of the world. Bridgewater's, and so, you know, from that signal in itself, it demonstrates there's a comfort level from their LP base, which is traditionally, I would say, you know, more defensive, and so, I'd say, you know, we're still on this uptrend.
So, I think that there's overabundance of capital in the space. A lot of these LPs that are coming in are investing into these VC funds at a very, very fast rate. So I think there's going to be an overabundance of capital over the next couple of quarters to deploy into very few companies that are worth investing into. So what do you see? You'll see a lot of valuations that are much higher than they should be because of supply and demand, right? You have so much capital flowing into very, very few, I feel like, companies relative to the capital. And the LPs or the VC funds have to deploy the capital. So there's a little bit of a mismatch. So a good place to be is probably in the early stage investing, I think. And it's a good time to be a founder. So, you know, it's easier than ever, I think, to raise you know, money from investors in the space, given the amount of inflow from various sources like the Brevin Howards of the world to the pension funds and endowments into the space. So just be very cautious, all of you investors, especially when it comes to investing into more growth stage companies in this space.
Amazing. Super interesting perspectives. So I'll start with another question, and you know, anybody from kind of the panel, feel free to sort of answer first. But you know, I think we all on this panel have sort of the benefit of sitting both on the investment side as well as on the building side. If you were a founder today, and maybe somebody in the audience is kind of thinking about an idea that they want to introduce, a white paper that they want to write, how would you fundraise today? Optimizing from a founder's perspective, what is the most efficient and founder-friendly vehicle to raise capital from today, do you think?
Yeah, I can take that since I'm a founder as well. Like, I'm actually spinning off like our work from Protocol Labs. So basically, the first thing that you want to do is just make sure that who you are getting in the first round, which is like a very privileged round right now, is going to be hands-on. So like, investors that are just going to deploy the capital, you shouldn't even like consider them. And this, of course, also includes very large VCs, because like, those are pretty good and they have very strong brands, but they can't like possibly help you out hands-on because they have so many companies in their portfolios. So I would focus on smaller VCs that are hands-on. If you're in DeFi, definitely you want to make sure that those VCs have also some technical team that can actually maybe provide liquidity to like your liquidity pools, do like some governance, help you out with building the community, and so on. So definitely like keep also like that round very small because you don't want to disincentivize like the next investors. So the least dilution you can have in the first round, the better, and the smaller VCs that are hands-on and technical as well.
So just to add there, I just went through a fundraise myself on behalf of my NFT minting infrastructure protocol. And I had the fortunate, unfortunate experience of speaking with 70 different funds, both hardcore, crypto native, traditional VCs, blockchain, ecosystem funds. I think it was really exploratory in terms of just learning what all of these different funds can offer. I think by and large, perhaps a sweeping generalization, but most crypto funds, especially those that are only maybe a year or two old, talk a big game in terms of portfolio support. I think the two key observations that I saw during those conversations on the traditional VC side was one, they have larger teams relative to their portfolio, and so they can actually support in a much more diligent way. And then two is the distribution in their portfolio ecosystem. So really depending on your protocol, what was relevant for us was integration into e-commerce platforms and gaming platforms. And so we were speaking with a lot of traditional VCs that had 50 plus companies in that space. And so for us, bridging into Web 2 and bringing those companies that had interest into developing an NFT strategy was really helpful for us. Whereas the crypto native funds, they perhaps have deployed into 100 companies protocols in the last year, and they just don't have the bandwidth to support it in that way.
I think what you're saying is we're just actually validating the traditional VC model with what you've just said, because a VC can bring much more than just capital. You want those networks, you want those platforms, you want those connections, the teams that you've just mentioned, they can bring you the value add. I think one of the biggest dangers in today's startup fundraising craze that we're currently in is early liquidity. And I actually think from a founder perspective, this is something that you have to keep in mind. Early liquidity doesn't necessarily mean that you will be able to deploy the capital sanely, and in a good way, guidance and networks, platforms, and people that can help you through this journey. You're still gonna develop a product or a service. You still have a roadmap that can help you through that process. I think that's very valuable.
And I'm going to add on to that is, I think there's going to be more fundraisers that happen through DAOs in the next 2 years than the last 2 years. And I also think that a lot of the VCs are going to be okay with that, right? You saw that with Union Square Ventures early on, A16Z, us, Ashima Capital. We are getting more comfortable investing into anonymous teams and DAO formats for fundraising. I think the tools are starting to come around in terms of how to raise via a DAO. You can ask Jeremy how to do that. But slowly but surely, I think a lot more founders are going to start raising via DAOs because it's a lot more transparent. It can be a lot more efficient, a lot cheaper, so cost effective, and you reach a larger audience, not just VCs in Silicon Valley, but anybody with an internet connection.
Yeah, super interesting. On that point, maybe this is just kind of a general yes or no question for this group here, but as part of sort of building decentralized technology, one of the sort of benefits or kind of philosophies around crypto fundraising is that it is more egalitarian, both for the investor as well as for the founder. Yes or no, do you think that that is true? Or do you think, kind of compared to Web 2 VC, this is still sort of an insider's game for this group here?
Yeah, I mean, you need to understand very different concepts. So it is still Web3 focused. So it's very hard for traditional VCs to understand all the things that are going on and the things that are accelerating. So yeah.
I think in theory, That is very much true. I think in reality it isn't. You know, if you look at the space from an economic point of view, as an economist, you want to have equal markets. You know, we want to have transparency and everything. And I think in this market, information is not equally distributed, right? So you have just a very small but a very powerful community that can actually have a great influence on everything and anything, basically. And so I think the idea is great. Are we there yet? I don't think so, and I think it's going to take a couple of years to get there.
Yeah, I completely agree. I think you know, signal and the type of capital that you're bringing in matters a lot in this space, since you know, your so-called equity or tokens, you know, often, you know, trade live very, very quickly, right? And so creating that narrative, I mean, that's a huge part of Web3 as part of community building, growing your social following, right? And then actually executing off of that. And if you don't have that early momentum in a protocol, it's really tough to kind of get out of the mud, especially, you know, you're stuck with your original investors, and so you need to be very thoughtful in terms of kind of who you're bringing into the fold long term.
So I do believe that it is an insider's game more so than it should be. But a little bit different than traditional VC is that you know, it's very community driven. So if you, as an early stage investor, put out good content on Twitter or Medium articles, you know, founders will notice that. And they'll take your capital. You don't have to be on Sand Hill Road as one of the top VCs in the world in order to in order to get into good deals. There's a lot of opportunity out there, and it's very egalitarian in that perspective, where, you know, you post something on mirror.xyz, you know, constantly, and you know, become a good contributor to, you know, the community, become a KOL, or become somebody who is you know, very good at one specific thing, and then expand from there. You can be, you know, the next large venture capital firm in the world.
Yeah, super interesting insights. One thing Matthias and Jeremy, both of you guys have mentioned is kind of the quickness or the speed of liquidity as a founder and as an investor in the space. You know, as Binance Labs, you know, one thing that we've been quite public about, CZ's tweeted about this multiple times, is that we actually believe that the 4-year vesting schedule is a bit of a legacy from Silicon Valley, when founders weren't kind of expecting liquidity for a long period of time. We're actually pushing more and more a 10-year vesting schedule for most tokens. I guess, you know, across this group here, let's sort of advance 4, 6, 10 years in this industry. Founders have vested. Most protocols will be completely sort of public and liquid. What does that look like from an investor landscape, from a founder landscape? What do you think is going to be the difference between Web3 versus traditional internet companies because of that?
It's a very good question. What do you say, 10 years?
That's
a lot of years, yes. Right? So 10 years. You know, I think, in general, I think you know, it takes longer than you anticipate when you're right in it right now, you know. So I think history repeats itself right now. You know, we're back in 2017. I mean, DAOs and, you know, equal access to venture capital opportunities, everything that was there in 2017, all the models were there, and it died off, you know. And why did it die off? Of course, there was crypto winter, but it also died off because, you know, innovation always drives regulation. But at some point, regulation is going to kick in, and this is completely clear, right? And you have to prepare for that. So if you look at the market, it's not actually the community, the projects, or us that is defining the model. It's the investors that want to invest in the products, right? And as soon as they are not there yet, as long as they are not there yet, they don't understand how this is done. You have to have some hybrid model, right? So, and I think that's a transition phase, and I hope that in 10 years, will be more digitized in the space. I think the VC model, the VC process can be much more digitized. I hope there will be some DAO governance elements in there, but I still think it's going to be hybrid.
Yeah, I can give a perspective on Protocol Labs. So Protocol Labs is an organization that's been around for 8 years now. So we are not at the 10 years mark yet, but we are getting there. And what's happening at Protocol Labs right now is that after the protocol was built after IPFS, Filecoin, and a bunch of other projects were basically in a state that like other people could continue contributing and driving some particular efforts of the project. We are getting now in a spot where people are actually like spinning off organizations on top of the protocol that are building particular things that are important for Filecoin. So I think that is going to be happening also in the organizations that are being built today, because at the end of the day, we are not building anymore a company that is for profit. We are building ecosystems where we need also to be thinking about who are going to be the next leaders that are going to be able to build on top of the protocols that we built. So like instead of having companies that just focus on extracting value, we're going to have like layers of leaders that actually build value on top of the existing work that was done, which will have a compounding effect and should speed up like the adoption of blockchain in general.
Very interesting. I would just say that there's so much noise in the space, and as an investor, you look at certain signals, and if you're a founder and you have a 10-year vesting, you are very likely to raise capital because it shows you there's a signal that you're very long term. I think on average, the crypto companies that are raising today have very, very short, 2 to 3 year vesting schedules, which is a lot different than traditional venture investing, right? Where a seed stage company takes about 10, maybe longer nowadays to go public or become acquired. So that's a little bit of alpha for all the founders out there, right? If you want to have a higher probability of raising capital from top investors, double your vesting. Just whatever it is today, double it. And you'll really turn heads because you'd be very unique in that point. Whereas every other founder is thinking about, okay, how do we exit at the win TG? How do we get out at the fastest possible? So if I saw more of those things, then I think the industry would be moving in the right direction.
I think as long as the investor is unlocking at the same schedule, right? I think then that's fair, right? You all feel like you're in it together. If that's not the case, right, then there's ill will, there's resentment built, right? It's also very challenging with the 5-10 year vesting where you're seeing anonymous teams that are doing a fair launch, making a ton of money, right, in very short order. It can be very demotivating for a founder, and so there's a bit of a balance there.
Oh, absolutely. Okay, so 2 minutes left in terms of this panel. Maybe we just kind of go around the horn. We're streaming live to obviously this audience, to kind of Binance globally. If there's one thing that you would advise any founder, any investor, anybody who's interested in Web3, what would be the one piece of advice that you'd give everybody right now?
Yeah, I would say like forget anything you know about fundraising because it's a completely different game now, and try to like think about new ways of doing fundraising in terms of like how to incentivize the team long term, how to like bring the right investors on board, how to work with those investors because they are going to be the ones that are actually pushing your product to the community and the ones actually like contributing daily. So yeah, just forget anything about traditional VC.
I tell these founders, there's currently too much dumb money. Go for the smart money. Keep in mind that this journey is going to take not 2 or 3 years, it's going to take 10 or more years. So choose your team and your supporters wisely.
If you can, bootstrap until you actually have a product shipped and find a bit of product market fit, build a community, and you will have a ton of organic interest from the investment community very, very quickly. You want to have leverage, I would say, as a founder, and I think that is, that's the piece of advice I'd provide.
Okay, so as a founder, there's a lot of dumb money out there. Don't take the first check that's given to you, right? As fast as they give you money, they will dump your coin. So do some reference checks as well, right? Everybody's moving very quickly in this space, but reference check your investors and talk to other founders that they've invested into and see if they've actually been value add and are they over-promising and under-delivering. Make sure that you have a strong cap table of seasoned investors, but also ones that will roll up their sleeves to actually help you out. So don't have a large, kind of party round, and just have some, strong investors that can actually add some value. It's a marriage, so you want to make sure that you do the diligence before you get into that relationship.
Amazing, cool. Well, Ida, Jeremy, Matthias, Vuk, on behalf of Binance and Binance Labs, thank you guys so much for joining us. And yeah, I think that ends our session. Thank you all so much.
Thank you very much, Ken, and to the rest of the panel for taking us through the often tricky world of fundraising. Now let's hope that this discussion will help many out there to raise funds and keep innovating. Now, as today, ladies and gentlemen, is going to be a bit of a shorter day, we will not be taking a lunch break. Instead, we're going to head into our last fireside chat. And then before wrapping up for today, we're going to have a virtual closing keynote speech from CZ. Leia, what do we have next?
That's right, Omar. So it's now time for our Forbes session, moderated by BNB Chain's Investment Director, Gwendolyn Regina. This session will cover responsible reporting and the evolution of blockchain media coverage. So this is definitely going to be a very interesting conversation. So please, could you all welcome Gwendolyn and her panel to the stage.
Round of applause, ladies and gentlemen.
Good afternoon, everyone. Last leg, right?
Yeah, no, let's. We've got to make this exciting.
Exactly. So my name is Gwendolyn Regina. I head up investments at the BNB Chain Fund, and today, fireside chat with Taha of Forbes. Taha, why don't you give us a rundown of who you are, what you do at Forbes?
Hi, everybody. It's so good to be here. It's a fantastic event. It's a pleasure to be able to meet with the Binance team and so many of you over here. As Gwen said, I'm Taha Ahmed. I lead corporate development, which includes our M&A investments. And then I also lead a corporate strategy for the firm, which includes strategic planning, as well as thinking about what's next for Forbes and what's next for media. And then finally, I also lead consumer growth, which includes all our subscription-based and recurring revenue businesses. And so I've been here at Forbes for 4 years almost, but feels like a lot of time.
And with a large portfolio, right?
Yes, absolutely. We're very busy with our upcoming IPO, and so there's a lot to do there.
And so for that, many of you would have read that Binance invested $200 million in your upcoming SPAC, right? So that's a big investment from Binance side of things. So today we really want to just get Taha's thoughts on the future of Forbes, future of Web3 media. We want to learn how Forbes has been, playing the game and charting the future. Yeah.
Let's do it.
Okay, so Forbes is classic.
Yeah.
Historical media, 104 years old. You've done a lot. Can you give us a bit of a history of Forbes and to the present?
Yeah, no, certainly. So just as a 60-second overview, Forbes is a 100-year plus media company, a diversified media company that I should say. We are on a mission to helping people achieve success. We do that by providing connections, inspiration, content, tools, resources for people to achieve success. Now, our business, as if I can just demystify it, if you will, a little bit, we have a media business, which is our traditional content business, which is Forbes.com, and our historically well-known magazine company, which has been there for the last 100+ years, which although is very small piece of it now. So that's our media business. But then we also have our brand extensions business, which is taking the Forbes name and going into non-media businesses, which is our events business, our financial services business. We have an education business. We have a real estate business that Forbes is part of. And then finally, the third division, which is the consumer business, which includes our e-commerce, affiliate business, and then our membership and some of the other recurring revenue business that we have. And now, for the first, say, 100 years of our first 90 years of our company, for sure, we've been focused on sort of the print, getting them the business and transition to digital. The last 10 years has been about digital, and in the digital side, we've built a massive scale, right? We touch 150 million people around the world, very highly qualified audience. We are in 40 countries. We have multiple editions. We have 80 platforms and multiple business per se. And then I think the future is now about consumer. We have the content, we've built the audience, which is another word for community, and now it's about consumer businesses, and that's where also some of our digital assets ambition fit as well.
That's where we're here to find out more, right?
Absolutely.
So Forbes has been fairly early on, covering from the media editorial side of things, what's been happening in the crypto world. So take us through some of the journey. I think 2013, you published the first article.
Yeah, no, absolutely. Like with all things, we've been at the forefront of covering emerging trends, being there before things have really happened or have become mainstream. And so the history, while I'm sure there's a lot of content there, but if you go back, the first article that was published was about somebody buying pizza with Bitcoin.
2 Bitcoins.
2 Bitcoins, precisely. And I think that's where the journey began. And I think from that point onwards, because we're focused on media and expanding coverage there, we've continued to cover the space from many different perspectives. What does it mean for the investors or participants in the space, and then what does it mean for the enterprise side as well, actually, the enterprise blockchain adoption and the likes thereof. So that's what our coverage area is focused on. But then very quickly, things have obviously accelerated in the last couple of years, and we've built platforms. So which is our the Blockchain 50 list that gets published every year, identifying some of the most promising companies there are in the world with respect to blockchain. And then we have our magazine cover, and CZ actually appeared on the 2018 cover as well. But then we've slowly implemented the Web3 applications as well. We've experimented paying for subscriptions or ad-light experiences by accepting crypto. We have experimented publishing on the blockchain as well. And now I think post-IPO world, with the investment that we now have, our focus is going to continue to expand, invest, and grow within our media vertical, because there's just so much to cover on, whether it's Web3, investing, enterprise adoption. There's so much to talk about. Even you can see from the crowd, right? The number of companies that exist touch on many different aspects of it. There's so much to cover. So we're going to continue to focus and grow and invest in that area.
So right now, the ability to pay for subscriptions via crypto, the publishing platform, the external one, went away, was acquired by another company. So where is Forbes today in terms of your current experiments that you are doing?
Yeah, no, look, I think the way we've thought about this, right, is experimentation, right? We are big believers in blockchain and obviously future of Web3, but I think as an an established company, we've got to balance our need to invest or actually I think not just for Forbes, but I think for any company, balance the need to invest in a certain aspect or area of the company, although very promising, with what the monetization opportunity is.
So short, medium, and long term.
Short, medium, and long term. I think that's what we've always going to balance out. And I think from that perspective, monetization for some of the new items are not there, but we've got to, we're approaching this by some early investment, early experimentation. So like I mentioned, we've tried publishing on the blockchain or accepting crypto. I think those were early days for many reasons. Some of the things didn't turn out. But now that we've learned and experimented, in our future, some of the things are certainly there that we want to do, and I think that's where we want to really make evaluate these decisions on an ongoing basis and see what makes sense.
So Forbes has many kinds of media, right?
Yeah.
And when we talk about the future of Web3 media, there can be different formats in which it results. So how are you thinking about that? Because you publish, again, Forbes published on the decentralized platform Civil years ago. That's been shut down.
Yeah.
Will you continue to do that? Is that in the plan soon? And maybe for what kind of media might you start experimenting with first from an editorial perspective?
I think it's certainly on the horizon that I will tell you. I think that we are, the first thing I guess on that point, whether it's text, whether it's audio, whether it's video, I think these are content mediums, if you will, and the resulting business model probably remains the same in some capacity, right? It's taking the content, getting enough audiences, which is about building communities around these particular content, and then the resulting business model.
And paying more the writers, you know?
And then paying the writers and the likes thereof. And so I think that we want to focus first on the tech side because I think that's where a bulk of the business is today, and that's what we want to do. So now with Civil, I think they were very early. They shut down before just about when they started was, but there was good learning for us for our tech team, the engineering team, and I think as we think about the future, one of the things we realize is that it's an area that we want to. That requires an investment. The blockchain developers that understand the media business model, or as well as what the resulting monetization is. I think that's also something that needs to be understood. And I think that's where I'm coming from a corporate development standpoint, is that every decision is a build versus buy or partner decision. And I think that as we go about doing this, I'm looking at this from all these three lenses. And I think that most likely we'll partner with a company, and I know there's a ton of there, so if there's anybody interested, would love to hear from you as well. We want to partner with people to accelerate this journey and share learning so that we can invest, so that we can grow on that front. And certainly, publishing on the blockchain or implementing this on the Web3 is fairly important.
So to build it out, you mentioned blockchain engineers, right? So you still need to build out the team.
Yep.
Right. So what kind of talent are you thinking of building for now? Yeah.
I think that it remains to be seen what aspect of what type of developers are going to focus on the media side. Does it really matter or whatnot? And I think that's where some of our strategic partners could be very helpful, right? Like so, I think. This is something that we want to do, and I think somebody like a Binance, who we can certainly partner with, because given your blockchain expertise, can help accelerate that journey much more faster.
So when you look at then the future right now, what most excites you about Web3 media? So you mentioned a lot of things, right? And the balancing between business models, short, medium, long term. There's so many things to do. What excites you, like you, Taha?
Yeah, no, I think the thing that excites me is actually the audience and community building. So one of the sort of the recurring themes is I've heard over these panels is community is important to the Web3 business, right? Media companies are really good in building communities and audience. So I think that if media companies can get ahead of this trend, they can leverage this competitive advantage that they have, which is around audience building, AKA community building, that when the business opportunity presents itself, because they will have an engaged community, that they will be able to faster accelerate and reach their monetization potential. So I think that's the first thing that gets me very excited. And I also mention that, the opportunity is big, needless to say, right? Like, I think like some of the people from the Binance side earlier mentioned that, you're on a goal to reach the next 1 billion users, right? Mm-hmm. Forbes is, in the digital asset space, the position we've taken is that we are a digital assets ecosystem enabler, right? And so we want to be the company or the or the media company or just a brand in general that is going to help accelerate this journey. And so as we do that, I think we're 10, 20, 25% of the way through the billion, depending on which numbers you measure from, right? Yeah. If we can build a larger presence there, or media companies in general can build a larger presence there, they can help realize this faster adoption to the masses around the world. And I think that is something that I'm genuinely very excited about.
So business models wise, that's something that with Web3 decentralization, it changes quite a lot. Right? So how are you thinking about it now, especially from a corp dev perspective? Because decentralized business models can be super drastically different from what you're used to, right? You pay your current writers on a monthly salary. With decentralization, Web3 media could be much more streaming kind of payments, much more from the community, from the audience. How are you thinking about that?
That's a great question, and I think that's been something that we've been thinking about a lot. The reality is that the monetization model is not clear. It certainly does not exist today. I think there's some great work that's going on in the market right now, whether it's connecting your wallets to the media business, whether it's publishing on the blockchain, whether it's approaching content as an NFT or tokenizing it. I think all of that still exists, but I think that the monetization will catch up in the next couple of years, and I think that's why the investment and experimentation has to happen today, and we need to keep an open mind about what the eventual business model will be, and the best thing you can do is learn today and set yourself up for the next couple of years.
So for Forbes right now, 2022, we're like 1 quarter in, right? What can we see next in the next few months, apart from your spec?
Yeah, no. I think there's a couple of things you will see. So I think we continue to invest in the digital asset side. You will see a lot more expanded coverage on the digital assets ecosystem.
On crypto?
On crypto, blockchain, Web3 overall, that is meant to attract different types of audiences, both could be the developer side, the enterprise side, the retail investor side. I think there'll be something for everybody. I think we plan on having our sort of Web3 summit and continue to grow there.
You just had one, no?
Yeah, we just had one. And I think we will have more platforms like Blockchain 50 identifying some of the most promising companies there as well. And then we're exploring some of the opportunities in the metaverse as well. So can we have an experiential offering in the metaverse? I think that could be very exciting. I think
like what, reading?
Let's have an event in the metaverse.
Okay.
Right? We've experimented doing this internally, having team meetings in the metaverse to see how it works and how people interact with it. So I think that's some of the exciting stuff. And then some of the points you earlier mentioned about accepting crypto as a payment. To the extent it's compliant, legal, and all of that good stuff, we will be able to potentially use that. I think that's certainly on the horizon. And then, education is an angle that we are looking very seriously as well.
Educating who?
Educating the masses, or the next 75, or whoever are the masses who have to become, get into the crypto world. So I think education for those. And then, I think thinking ahead, can there be a decentralized application for a media company that could have a model like, learn to earn around content and an education? Something certainly that it's on our mind, but I think, again, balancing the need for areas of opportunity that we need to invest today, set ourselves up versus the next big experiment that the monetization, which today remains to be unknown and are going to come in the next couple of years.
Yeah, and Forbes with 150 million users would be amazing. We can get them, all onto crypto, right?
Absolutely, and hopefully more than 150 million, because I think it's about setting yourselves up for the audience and then we can go from there.
Amazing. Okay, so Forbes is still relatively early in the journey in terms of building this out. Super exciting. You had a call for people to partner with you. How can they reach you?
How can they reach me? I mean, I think certainly.
What do you have to say to them?
Look, I think that whether it's Forbes or whether it's any media company or traditional or content company per se, there's a lot of good stuff that's happening here, either developer side or businesses or partnerships. I think that approaching these companies from a partnership perspective, and whether it's leveraging the audiences and communities of media companies and the technology that you've built, there's a very nice synergy there. I think that needs to be experimented and explored. So I think that's how some of the people can start working with Forbes, or for that matter, any company, media company in the space.
Yeah, and so to Forbes to another 100 years at least.
Absolutely,
crypto.
we got to do that.
Awesome. Okay, thank you, Taha.
Thank you,
Forbes.
Gwen. Pleasure.
Thank you. My name is Gwen from BNB Chain Fund. Thank you all.
Appreciate it. Thank you, everybody.
A big thank you to Gwendolyn and Taha for your information when it comes to blockchain reporting. Crypto blockchain is constantly in the media at the moment, so it's essential that we understand how to report on it in the best way possible. So the time has finally come, and we are approaching the last session of the day and, of course, the event. But before we move on to the last speech, let's have a massive round of applause for all the speakers, all the moderators, and, of course, all the staff that have made this event possible.
Now, ladies and gentlemen, joining us next is Binance's very own CZ, who will be joining us virtually to share his thoughts, feelings, and importance of this week's event and the industry as a whole. I believe we have him on standby, and let's actually welcome Mr. CZ with a warm round of applause, ladies and gentlemen. There he is.
Thank you guys so much for attending this conference. And I hope this has been a very useful 3 days for you. And I also do hope you to stay in Dubai a little bit longer and explore the city a little bit more. I'm sure all of you guys have explored the city to some extent. So this event is really about education. I think learning and education are the key pillars, are the key requirements for this industry. We're still very new, we're still very young, we're still very early. So I hope today's mastering the essentials of crypto investments and trading is helpful to you guys. And I think it's very important to help people make informed decisions and also improve the image of a crypto investment to a wider audience. I also hope that you have learned more about Binance, our sponsors, the other industry players at the event, and also the speakers. I also hope you have learned more about Dubai, especially in regards to crypto regulations, how the government work, and the people of Dubai and the city itself, and also in general UAE and the Middle East region. I think Dubai and UAE offers a very welcoming environment for all of crypto people and all of people in general. Also, I want to stress that the importance of Dubai in the blockchain week process and to the blockchain world. Recently, Dubai has granted a number of licenses to crypto players, including Binance, including other crypto exchanges, and also very soon, including other crypto players, including funds, other service providers, which is very important for not only Dubai and not only the crypto industry, but for the world, I think. So I think it's very important for this progress and for us to support this progress that's happening in Dubai right now. I hope all of you guys enjoyed the event. What I heard from the feedback is some people have been requesting more frequent events like this. So we're debating, we're thinking, discussing about having 2 events per year, one in Dubai, one in a different city. I'm not sure if you guys are supportive or not of that. If you guys are, let's hear some noise. Yes or no, or not sure. Okay, I think there's probably a delayed feedback on the, I can see you guys actually. I can see most of the audience, but I think there's probably a delayed feedback. So we want this event to be dedicated to education. We've held this event in Singapore before, in Vietnam before, and going forward, we'll try to make it a biannual cadence. So yeah, and lastly, I want to thank all of you guys for attending, all the speakers, all of our staff. And I want to thank the Dubai government for being very supportive in helping us running this event. And I think having the in-person event is really, really good. And for me, it really sucks. Still the COVID Zoom experience is not that great. But I hope you guys all enjoyed it. I really hope to continue to see you guys in the next event. And also, if any of you guys who are staying in the city for a little bit longer, as soon as I'm out of the quarantine period, I would love to meet with some of you guys who are still here in person. Yeah, I think that's pretty much it. Thank you so much, and hope to see you next time.
Ladies and gentlemen, that was an amazing speech by Binance's own CZ. Now, ladies and gentlemen, if I can get your attention for just 1 second before you walk out, I want to take a very quick moment to thank the entire team of Binance for putting in efforts. Go ahead, ladies and gentlemen, let's hear a round of applause. Next up, I would also like for all of us to thank this wonderful city called Dubai and this country called the United Arab Emirates with a warm round of applause as well for making this happen. Last but not least, ladies and gentlemen, I want you to all put your hands together for my lovely and amazing co-host, Leia, ladies and gentlemen.
Thank you.
Thank you. Last but not least, guys, I want to take a minute to thank each and every one of you sincerely for making this event what it actually is. And that's it. My name is Omar. It was an honor being here with you guys, and have a wonderful rest of your day. Thank you.
doesn't even matter. I had to fall to lose it all. In the end, it doesn't even matter. I tried so hard and got so far. But in the end, it doesn't even matter. I had to fall to lose it all. In the end, it doesn't even matter.
And you me love, and you me love. So the relation can't done, no.
I don't wanna feel weak like I feel right now. I don't wanna feel the whole world crumbling down. But mostly I don't wanna feel you slip away from my fingertips. 'Cause there is nowhere safe.